Ohayo gozaimasu. Hello, YouTube. I am going to record a video today about trading and finance because it seems this is a topic that a lot of people are pretty interested in, and also it shows a direct, rather practical application of a lot of the more fun meme language, symbolism, etc., sort of stuff that I might enjoy talking about more on this channel relative to boring bean counting. So let's get started. First, just to, I guess, show my credentials, why you might consider listening to some of the things I have to say about trading is here's a screenshot of my portfolio. I put out the actual monetary numbers, but I left the percent on here. So here this past year, I'm up almost 240%. You could see on this graph. And my graph, it's got its ups and downs, but it's a relatively continuing upward graph. So in any case, this is pretty good portfolio returns. I mean, that's part of the reason why I'm able to make a YouTube video at 10:28 a.m. So what I'm telling you here is because this information has been useful and helpful to me, and maybe it could be something that could be useful and helpful to you as well. Of course, you could find lots of other people with fancier graphics or more exciting memes, etc., etc. But what I'm trying to tell you is basically a way to do some trading to make some money while not being obsessed about it or like weird about it. I mean, basically to just go with the vibes, have a good time, make some money, and love God and your neighbor and have fun. So let's get started. This video I've titled "An Introduction to Vibe Trading." The term vibes has been around for a while. I mean, the boomers would talk about good vibes and bad vibes and stuff. But I think that there's actually some very nice symbolic or metaphysical, I don't know what you want to call it, connections behind this term. One thing about the term vibration is it has to do with waves, kind of like the ocean. We could talk about like light, waves, particles, etc., etc. Anyways, waves are everywhere, but the basic idea behind a wave is we have this natural fluctuations in nature. And if you're able to sort of get in sync or master these vibes, then, presumably if you have a graph that goes like this, if you buy low and sell high and you continually do that, you kind of ride a price action wave, then lo and behold, you have an infinite money machine. Just like if you're able to harness the currents of the sea to generate electricity or something, you have your mega money machine. So, kind of what I do, I'm just calling it vibe trading because in many ways, I'm doing a similar thing to somebody that's surfing or riding a wave or something. But instead of playing a real cool looking instrument. Instead, I'm just playing these weaponized bean counter computer nerd money financial instruments. So let me just briefly go through what I'm doing. I actually don't think this video will be too long because most of what's done is just watching the waves and doing the thing. It's not an extremely wordy thing that I'm going to be talking about here, similar to how, some goes surfing or something. The majority of their time is not going to be spent, yapping away and talking, but it's going to be, using their senses to watch the environment and try to do the cool and fun thing. So let's take a look. So what do I do as a vibe trader? Roughly the way I got started, sort of looking at stocks and things like that, was for many years I just picked stocks that beat the S&P, so one of the major indexes. So a lot of like boomer advice is basically, oh yeah, if you have money, just throw it into one of the major index funds. You can't beat the market. You can't beat, the big suit people who do this full time. Which I don't think that this is necessarily bad advice for most people. If you don't like thinking about trading or don't want to do speculation stuff, then by all means just buy the major indices. Anyways, so I got my start though. I took about 90% of the money I had and I followed that advice. And then I took about 10% and I was like, I'm just going to aggressively gamble and have fun with this. So that 10% of money that I had, I would choose my own assets to buy. For example, cryptocurrencies, exciting stocks, like way back in say like 2014-ish, I think is kind of around when I got started. Then I would buy stuff like I bought Tesla way back then, and I think I made over 10x on Tesla. In any case, I took about 10% of the money I had to use on higher risk, not just buy an index fund, and to put into more exciting things. And then basically over time, that 10% I started with competing against the 90%. Now I think that for my holdings now, that 10% is probably like way bigger than the amount that I just put in the normal indexes or whatever. And that's including taking out that money to like buy stuff and pay for stuff. So in any case, the basic idea of what I was doing there was I chose a kind of blend. So 90% boring, 10% kind of risk taking. And then I adjusted those ratios over time to meet the needs that I had. So that sort of breakdown of 10%, 90%, whatever, I take a similar sort of approach even now, though now this is my first successful full year doing a full-time trading, not even working any normie job whatsoever. So it's worked so far. Well, we'll see how it keeps on going. But the basic idea is the same, that I kind of create a blend. So now the current blend I'm using for my trading portfolio is as follows. I do about 70% stocks, 10% crypto. I'm not like a crypto expert person. I know a bunch of friends who are into crypto. So basically, I just try to copy them and do what they say. I mean, this is too one of the fun parts about trading is you could participate in the successes and the losses of your friends. So one thing I do, I don't really analyze crypto. As you'll see, the title of this video is Vibe Trading. I don't do like any like real technical analysis or even fundamentals analysis. Really, I just vibe. So with crypto too, about 10%. That's saying, I'm willing to go about 10% up and down with my friends. Super concentrated crypto only portfolios, because I will look at these friends and a lot of people maybe they've gotten like actually way better returns than me only trading Bitcoin, which is kind of funny. So I respect it's kind of like in an anime where you have different people fighting. They all got different powers. They all got different styles or approaches. I think that's one of the cool things about trading, especially vibe trading, is there's many ways to win, or as the American metaphor is, there's many ways to skin the cat. In any case, you aren't locked down though to just doing one. So like I said, I don't really think much about crypto, but I could still make use of a large, sizable amount of US dollars buying crypto and crypto related stuff, sort of following the markets there, so that I don't get FOMO, fear of missing out, for having not capitalized on some big old crypto movement. So actually it was funny, the last video I posted, the explaining Chud Jack, a Warrior in the Garden video, go check it out if you haven't already, is very shortly after I posted that video, we got, I guess, what was being counted as one of the biggest flash dips in crypto history. I think a bunch of altcoins went down like over 20%. Anyways, it was kind of timely right after I posted that Chud Jack video about nothing ever happens. Then that happened, and then of course I went in and I bought a bunch of this because if I believe ultimately these cryptos, a lot of them are going to go up, then with this little flash dip, then they're just on sale. So that's cool. Okay. Yeah, so going back, my current blend, 70% stocks, 10% crypto, 10% stock options, and then 10% cash. And this cash is very important. A lot of people, I think because of fear of missing out, there's a tendency to go all in. So I have $5,000 to spare. I'm gonna use this $5,000 to like buy all Google stock because I don't want to miss out on upward movement. Of course, why you don't want to do that is because you want to have movement and flexibility to buy in the event that there's a big dip. So like 10% cash or whatever here, that's saying like if there is a big dip, such as when there was the flash crash, when I posted my last video shortly after, then I had a bunch of cash already ready, freed up, so that I could buy in without any problem. So I wrote a little paragraph here about what it is that I actually like do. If I say like, oh, I'm trading, it's like, well, what do you even do? Are you like reading articles? Are you writing reports? No, I'm not writing any reports or reading any articles. Here's what I'm doing. So what you're actually doing in managing a portfolio is buy and sell to maintain these ratios. So like these are the kind of ratios I'm currently working with. You could call this a kind of it's like an individual market hypothesis, or like if you're doing a sailing ship, you put the sails or you put things in a particular sort of configuration to take advantage of the winds. So that's the sort of active management that you're going to have to do, is rebalancing your portfolio. So, for example, if I make a nice 10% off some stocks this month, I will sell some of my stocks because if the stocks appreciated in value, then relative to my portfolio, let's assume the cash basically does nothing, then I might have stocks that's making 75% of my portfolio instead of my kind of target 70%. So I'll have to sell some stocks, and this is where sort of being disciplined and looking at a plan comes in. I'll sell my stocks, which means missing out on some potential gains for being all in. But the reason I do that is so that I have cash ready for stuff like the flash crypto dip that we just saw. Cool. All right. So when approaching the markets, basically everyone that looks at these things tries to do some investing. They'll have some ideas about what's going on. So one kind of more technical way to look at that is the market will have trends. The line going up means it's trending up. The line, with its waves, ups and downs, but tends to go down, that would be going down. So this is what in jargon people call overall like a bull market or a bear market. So overall, I've actually been rather surprised and impressed that our good friends at the Federal Reserve have been able to keep the number just continually going up, which is kind of nutso. But you look at the data, that's what it shows. So the environment we're in is that the number tends to go up, though. As I'll talk about a little bit further, you can prepare yourself, for example, by having a bunch of cash for an event that things do go down. So like, for example, if stock prices like across the board dropped, say 10%, that would be considered huge in kind of economists, news people's minds. But if your portfolio is actually set up to handle and work with that, then that just means like, oh, I woke up, oh shoot, I made a bunch of money. There's no problem whatsoever. So it's like you don't get mad at the waves and stuff in the ocean. You kind of just look at what the cycles, what the trends are, and then you react by refactoring, whatever you want to call it, reshuffling, rebalancing your portfolio in order to meet what might be coming. Okay, so here I'm going to talk a little bit about why I do the ratios that I do. So 70% stocks, 10% crypto, 10% options, 10% cash. why have 70% in stocks? So this is to capture the movement of stock prices tend to be going up. So holding blue chip stocks, this will include big companies like Nvidia as well as aggressive growth stocks like Robinhood, which is a company I use. You'll see that the portfolio I'm trading, I mainly use Robinhood, though I've used other exchanges. Actually, I mean, Robinhood is my favorite. It's a fun, nice app to use, and I'm impressed at how Vlad, Tenev, and friends continue to improve and add new things to their product. In any case, enough shilling for Robinhood. This video is not sponsored. I like to hold a lot of stocks because, in general, the stocks will tend to go up in price, or you could say the assets appreciate in value. So to hold stuff rather than say go like 90% cash allows you to capture or make use of those movements. So the number tending to go up, that doesn't mean that the number never goes down. It's just saying that overall it's tending to go up. So oftentimes when the number goes down, for example, let's just say in a day the major index goes down 3%. That would be considered relatively like a big dip. Then if you have the cash free, things drop 3%. Hey, it's 3% discount. Go ahead and buy stuff, and sure enough, you'll expect the number to go back up. So that's kind of a more passive way to use the downward movements, is just to buy at these lower prices. One could go a step further, and you could actually profit off the downward movements directly, not just in the sense of buying cheap. So that's one reason that I use options. I'm not going to go into in this video, but one thing I do is I buy like put options. So let's say I have 70% stocks, I profit if the market goes up. Then I'll have like a few put options bought. So if the market actually goes down, then I will make a profit off the options. And then the next day, let's say that the stocks go back up. Then I'll collect the money that I had on the options, so I'll profit from the downward movement, and then I'm still holding all these stocks, so I benefit from the upward movement. So over time, to buy these, you could call them hedges against downward movements. I mean, you got to buy them, you got to pay for them. It's kind of like buying insurance in a way. So if you buy, whether it's using shorts or like put options. I don't use shorts myself because I don't like to borrow money if I don't have to. But puts is a way to pay money up front, such that if there is a downward movement, you'll make profit, and you could choose to buy as much as you need. So if stuff seems like it's not going to go down at all, you could save money and not buy the put options. Or if you think Trump's talking about tariffs, things are getting a bit shaky, then by all means go and buy a whole bunch of put options, because you'll expect to wake up in the morning and make a gajillion dollars. Okay, so to continue off another point, so the market number goes up meme that I have here shown in this meme. One reason I believe that in general is most people, they don't think about the markets like how I'm talking about it in this video. So here, number goes down or number goes up. I just look at if the number goes up or down. I'm not looking at it as number goes up or number goes down is good or bad. These are both things that happen. It's just like if you look at seasons in the world, like is winter good or bad? Is fall or summer good or bad? I mean, these different seasons, they all have their attributes, and if you learn how to use what they provide at the time in which they do their thing, then you could make the most of every season. So that would be vibing with the Earth's cycles. So here I'm just saying, like, you could vibe with the financial cycles, which this gets pretty philosophical, but they too will follow their own sort of rules or logic, which us, people on computers, were able to study and learn things about if we're willing. So in any case, don't think number up, number down for individual stocks or assets to be good or bad. Just study the pattern and know that in general, though, the narrative that people are told is that graph goes up means world more gooder. Um, so, like if I go on social media now, there will be tons of posts where I'll be like, "Oh no, it's over. The S&P went down. Oh no, doom and gloom." But like for someone like me who's looking at how to respond to these different trends or movements, this is not good or bad. In fact, I would say overall, it's good when there just is movement, because if if the wind is blowing, you could do something. Like, to use a sailing analogy, even though I've never been on a sailing boat. It's like the scariest thing is if there's no wind at all and you're trapped in the middle of the ocean, because then you can't move at all. Your portfolio can't make money. However, if there's winds, even winds that would kind of be going against you, you could use those winds in order to cut or move, or someone that knows something about boats, tell me how this works. But the idea basically is you need movement in order to do stuff, and even if you have like an oppositional wind, you could use that to your advantage. All right. So far I've talked about how when making a portfolio, I kind of make a blend of what I feel is appropriate for. I mean, basically, as I said, I don't really do any technical analysis. It's most based on like how much am I comfortable with the numbers moving in a day, and I make my ratios of stocks, options, etc. as I choose. And note, when you too, if you choose to do this sort of thing, you could choose totally different asset classes than I did, and you do the same thing. For example, like I have some friends that do things like forex, like foreign exchange, different currencies and stuff. I don't touch that stuff at all, but obviously, a lot of people, they have a lot of success with it. Otherwise, it wouldn't be so popular. So you could, for example, if you hate cryptocurrency, you could be like, I don't do any cryptocurrency. I do 10% forex, 60% stocks, and then 30% cash or whatever. You could choose whatever ratio is to your liking. All right, back to vibrations. So here I have a screenshot I took earlier today. So this is QQQ. This is one of the big indexes. I like to trade big indexes because they have what you call high liquidity. So if I buy options on this, I mean, there's always a seller basically available. Sometimes people, they'll try to go for small, what you call penny stocks, or like the meme coins, the quote unquote the shit coins, stuff like that. And people will get in these traps where they might have like what looks on their computer screen to be a big profit, but if they don't have any buyers available for the junk that they loaded up on, then you're out of luck. Profit is only there if you actually sell. You only get a realized profit if you sell. So I like to use big things like QQQ index or whatever, because I always know that there will be lots of buyers and sellers. So if I see an exciting line, then I could make use of it. In any case, so I showed this line here. So as you can see on a graph, today I'm just showing this graph because it's today. You'll see some ups and downs. So at any moment in time, imagine you can't see the future on this graph. Like this line, okay, so on the mouse, I'm looking at this line. It seems like I'm at the top, and then you get this red line going down. So this is all like within a day. You could adjust your time frame as you see fit. But in any case, a couple things about markets that tends to be like a rule is the line isn't just like jiggity jaggedy random. We see what there tend to be what we call trends. So if the line's been going up for a while, probably sooner or later it's going to be going down. So here, the line's been going up for a while. If you just wanted to like buy this index, it's probably not a good time to buy the index if the line's kind of going up. You just wait at some point where the line goes down. Then let's say here, it's like, all right, the line's been going down for some time. I think it's going to go back up. You might end up buying in here and it still goes down a little bit more. No big deal, because soon enough it'll go up again. So one thing that's cool about these modern tools like Robinhood or whatever charting software or stuff that you might take a look at is you could basically go through history and sort of see for any given asset how the lines or the graphs tend to move, and then you looking at the instantaneous, the moment in time that you happen to be at, you could make moves or predictions about what you want to do. So when I'm trading, like doing quote unquote day trading, so I'll define that as buying and selling the same thing within a certain day. Like with stocks, for example, my goal would be, to buy the stock at this price down here. Usually I'll be doing this via options, by the way, not like, trading gajillions of dollars of actual stocks. I'll be doing this through options. But the same idea applies. Like I'll try to buy here when it's low, and then when it goes up, it's like, okay, the line's been going up for a while. I'm gonna sell now because I don't think the line can keep going up more. So buy low, sell high. But crucially, and here I think is what differentiates someone who calls themselves a person that actively trades or does day trading or whatever versus a more passive investor, is if you're actually trading, you actually have to sell. So by selling up here, I free up money with the goal that I could buy, down here. And like, let's just say I go to eat lunch, I go to meet a friend, I go to church, whatever it is that I do, stuff happens. You're not going to capitalize off every wave, but you're not like, a surfer who you're eating your lunch and you're just like looking out the ocean saying like, oh, those are all the, fun waves I'm missing. Like that's no way to vibe trade. You're ready to hop into the ocean when it's time to do that. But then when you're out of the ocean, then that's cool too. You don't stress out about it. And the reason, like I or whoever could choose the particular blend that they do for their portfolio, is for the goal that you sleep well at night. You don't worry too much about what's happening. So like for me, for instance, 70% stocks. I mean, if there is a huge stock downward movement, then yeah, my portfolio is going to probably go down a little bit. But if that really worries me, then I buy a couple of put options. So then, my portfolio stays the same or even goes up if that happens. It's just like preparing for anything else. You make the proper preparations or purchases or things that you can. Then whatever the next day brings, you've done your part, setting yourself up for success, preparing. And then, if there's a big movement, it's fun and exciting as opposed to something to doom and gloom about. So you're taking an active approach, actively managing your portfolio, your assets, rather than, just a CNN style, waiting for things to happen to you and like dooming and glooming when the number goes down. Do the opposite. Make it so that you're happy when the number goes down. Via put options or having a bunch of cash ready to buy the dip, et cetera, et cetera. You could totally see a dip event happening. This is not like an unknown, unprecedented event. The nature of the markets is that the numbers go up and down, though I will say they tend to go up, and so you just prepare yourself for what you realistically expect to happen, and you don't doom and gloom about it. You just look at what you can do and try to choose your best blend to capitalize off that. And you choose a best blend too based on the sort of time frame or time and attention that you're willing to do. So like as I mentioned now, for example, I do options and I day trade options. However, if I started just working a full-time normal job, I wouldn't be able to trade options on the daily. So I'd probably, make the option category down to like, 2% or something really small, and then mostly just be ready to respond on a kind of a, 24, 48 hour basis or whatever, instead of taking a much more active approach that I do. All right, so this video is getting a bit long, so I think I'll slowly wrap up here. In summary, I'm sharing this information because I found it useful. I've been trading full time for the past year or so, and as you can see from my graph, It's all been pretty good overall. There's been some downward movements. So, for example, here in the middle of the graph, I made a bunch of money when Trump was talking about tariffs. So I bought a bunch of I bought a bunch of put options, made a bunch of money then. Um, then I kept on buying a bunch of put options because I thought that he would keep on doing the tariff thing. But over time, he actually stopped. So my portfolio value went down as I lost some of those profits that I had made from basically buying a bunch of puts, waiting for the market to go down. So like an equivalent of that would be like if you're a state or a nation and you're not going to war, but then you just spend a ton of money, maintaining these massive battle cruisers or whatever. It like costs money or there's expenses in order to be vigilant for a kind of clash event. So over time, then I chose like a less sort of vigilant doom strategy, went more into all right, number just goes up, and eventually that was able to help my portfolio recover and continue to profit of that sort of arrangement. And then now, I believe we'll see what happens in the future. But as I'm getting more experience, seeing these different sort of scenarios, I think I'm better at just trying to get the number to steadily go up. So that's kind of my goal with this portfolio is like I want the number basically in any market conditions to slowly inch its way up, able to capitalize off big events like the flash dip that just happened. I think I lost like a tiny bit of money like over the past couple days. But then over the next 2 weeks, for instance, I expect that a bunch of these things that I bought cheap, the value will go up over time. So who knows? Maybe then I'll post another video. We'll see if I'm right about that. In any case, whatever happens, I don't think I'm going to freak out because, as I said, you make a portfolio blend that's ready to respond to stuff as you want, and it should all be good. All right. So just to conclude, I want to end this video on a positive note. So when I'm trading, people often think about money, finance as like evil, doomy, and gloomy, but I don't think it has to be that way. I think that we should love God and your neighbor and have fun. One thing that I try to do with my portfolio in particular, my trading portfolio, is I do not use usury or risk-free returns as much as I can. So I don't say, have $1 million and collect, 5% a year risk-free return. Not only is that boring, I think that's kind of like in the story in the Bible of the servant who buried the talent that he was given. Instead, I think that we're urged to actively, you could call it taking risk, but buy and sell and to actually enjoy living our lives. So enjoy risky returns, go for the hunt. There's nothing wrong with trying to do what is profitable. And when you do make money, be generous, help other people. That's one thing I'm trying to do with this video is if some information or something has been helpful to me, I also want to be able to pass it down to you. So I'll close with this quote that we got from St. Basil the Great. It says, "If you begin to guard wealth, it will not be yours. But if you begin to distribute it, you will not lose it." And on X, this community group here, I have a group called Orthodox Trading and Finance or something like that, a community on the Elon app. So go ahead and follow me on the Elon app and join me there and sharing some memes, making some trades, having some fun. In any case, I hope that the information in this video was useful or helpful in some way, and then also something that could be encouraging for everybody. I think in the year 2025, whether we like it or not, stuff is getting financialized everywhere. Like money, internets, they're leaking everywhere. You can't avoid it. So similar to how somebody might say like, all right, none of us are doing farm work now. Everyone has to kind of like lift weights and go running and stuff. In a similar way, it's like I don't. I have my preferences. I wish we didn't all have to do like hustle bro culture or whatever. But in the world as it is, it seems like most people, many people, especially if you're in a kind of urban environment, you could really benefit from doing trading, finance type stuff. Just like how I should, drag my lazy ass outside and go for a run later today in this nice cooling down full weather. Um, we could all look for areas that we can improve and enjoy our time, winning together. So thank you all for watching this video. Like, subscribe, do all the rest. Share this video with your friends and family, etc. if you found it helpful. And I thank you all for your attention.